Profit. Welcome back. Markets at 53.57, so 1.25% lower. Bank Nifty is approaching the 0.5% loss mark. It's still away, but 90.72 on Bank Nifty futures. And there is an attempt at a comeback, but let's see. Mr. D.K. Joshi, Senior Director and Chief Economist at Crisil, he joins in right now. Sir, thanks for your time. Good morning, Prashant here. Where do you stand on GDP growth estimates, sir, for fiscal 14?
Well, I think we are in the process of revising it, and I think we are re-looking at the numbers. We haven't come out with our revised numbers as yet, but as of now, our forecast stands at 5.5%, and I think ever since we made this forecast, the downside risks to the economy have only increased, particularly in industry and also in the services sector. So I think we are still working on the revision.
Revision down, I guess, right?
Yeah, I think that's more probable. Yeah.
What is plaguing the currency and this downward spiral in financial markets? What is driving it? Do you think it is very real and extreme growth fears, or do you think it's basically fears about we sort of hurtling towards a balance of payment crisis type of situation? Which one is it?
Well, I think it's a cocktail of factors. I mean, it's the one, I think on one hand you have a very high external vulnerability. Your current account deficit continues to remain high, so you have high financing requirements. And on the domestic side, I think the domestic vulnerability has also risen because the industry growth, as we know, is at a 20-year low. Service sector growth has come off very sharply. Investment scenario is very bleak. So I think the growth prospects itself are reducing. So you have a very high external vulnerability and a sharply slowing domestic economy. So in such a scenario, I think the ability of the economy to attract capital reduces, and I think so it's no surprise that the sentiment has become so weak. I mean, and right now I think the rupee probably has depreciated more than what was dictated by the even weak fundamentals, because I think sentiments are at play. But I think the third element that I want to bring in is, apart from rising external vulnerability and sharply slowing economy, is the developments on the external front. I think in such a scenario, I think any shock from the global side or any speculation of shock from the global side is going to create ripples in both the financial markets as well as in the currency markets. So I think I'm talking of the Fed move here. So there's a lot of chatter around when the Fed is going to wind down its program, and I think that itself is having an impact on both the global liquidity expectation as well as the investment sentiment. So I think that is adverse for us. So I think in this scenario, a cocktail of so many bad or adverse factors is, I think, causing sentiment to go down so sharply, and also I think causing a deep downward slide in the currency.
No doubt. So, what do you think? How do you think the RBI will respond? Do you think they've got to choose now between protecting either growth or going after inflation? Okay, let me just say growth or the rupee, right? Because that's the focus. And do you think it has to be as clear as that? Because you can't do enough for both at the same time. Maybe one will follow the other with a lag, but it's unlikely that you'll do something for one and it will benefit everything else as well. So they've got to make that choice. And what do you think that choice should be?
I think it's a very difficult question to answer at this juncture, because I think on the inflation front, whatever comfort was there, I think that has started waning, because the rupee depreciation has also caused an inflation expectation in the economy. The imported costs are all rising, and I think that's very clearly visible in the last month's WPI. So I think WPI inflation has also started inching up. CPI is already high. So in this scenario, I think if the central bank focuses on inflation or on currency, I think then cutting interest rates becomes very difficult for it. So it's a very, very difficult choice, and I don't know, I think we have to wait for the new governor to see and see what kind of take he has on this. But I think as of now, I think it's extremely difficult to, it's not either or. I mean, I think my sense is that the easing will not happen anytime soon. I mean, it doesn't look like, and I think given the risks both on the currency, so I think on the currency front as well as on the inflation front, RBI might continue with its policy. Now, I think the issue here is that the extreme tightening that has happened because of liquidity tightening measures. I think the bond yields have gone up very significantly, both at the short end as well as at the long end. I think that means that there is extreme tightening going on. I think if rupee tends to stabilize or show some signs of stabilization, then we could see these measures being taken off, and then obviously I think interest rates will come down from these current levels. But I think for RBI to start cutting rates, I think looks like a difficult proposition at this juncture.
It would look like a difficult proposition.
I think I want to add here is that the growth is also suffering not because of interest rates alone. I mean, there are other factors also at play. I think they also need to be released. I mean, the binding constraints are from to growth are from projects not being cleared, from coal not being available to mining, which have been often spoken about. I think these binding constraints also need to be released. I think interest rate cut alone cannot engineer a turnaround in the economy at this juncture.
Yeah, no, I agree with that. But I'm just, I just suggested that because it's only after mid-July, 15th of July to be precise, when the RBI put out the first set of measures to tighten rupee liquidity, that growth estimates and growth projections and general growth outlook started coming off quite a bit, as you yourself said. You're at 5.5%, but you're going to revise that lower. How low is something that you're still deciding, right? So what has happened is growth outlook has shrunk even more.
Yeah, because I think earlier there was some expectation that interest rates would soften a bit, and we were penciling in 25 to 50 basis point repo rate cut from RBI. But instead of that, what we have seen is interest rates have gone up very sharply. So I think this sharp increase in interest rates needs to come down. I think that can only come down if they take these excessive liquidity tightening measures off. I think once that happens, you will see the bond yields, etc., stabilizing. But I don't see interest rates going below what they were before July 25. So I think that kind of scenario will continue, and the longer this tight liquidity situation continues, the more it is going to hurt the growth prospects, because this is excessive. I would call it extreme tightening.
Yeah, got that. So thanks very much for your time. Good to hear your thoughts. Appreciate it very much. That's the views coming in from Mr. D.K. Joshi at Crisil. Let's just take a very quick break at this stage. I'm going to come back in 2 minutes. We'll talk some more markets. Vikas Khemani is joining us on the other side from Edelweiss Financial Services. Back with him.